So this is weekly commentary 53. Now, before we get into the weekly analysis for the next weekly candles expansion, let's understand the monthly chart. So we had this fair value gap. Let me just remove this fib. This fib, you'll see why I use this later. From this candle's high to this candle's low, we had a fair value gap. Now this is discount of this range from this low to this high. We retrace down. Now understand that this is the start of the year and this is towards the end. This is the end of 2022 and this is the start of 2023. A Judah swing is very likely to happen between that time to kickstart the next year for the expansion. Now we're going to go into March. March is the start of a new quarter, right? And we expect big kicks around this quarter. This quarter is usually the one with a lot of kick in it, right? If you see March, April, May, you see that move there. Compare it to the last three, 1, 2, 3, right? 1, 2, 3. These ones are the ones that you know, it's prime time for the year now. That boring part is done. This is the time where you really have to dial in. This is where you have to kind of seize the opportunity. Now, a lot of you guys that done the hard work from, you know, you've been here for months, this is what you've been prepared for. Now, if we apply the fib, right, from this low to this high, and I want to explain this because you can use this for every single time frame. Now, we retrace down lower, and we see in the discount we had a PD area being this fair value gap. Now, when we sweep the previous candle's low, it could be a 15-minute time frame, 5-minute time frame, daily. Why is there more emphasis on a previous day sweep in a discount and not a previous 15-minute candle sweep? It's because it's eligible to the time frame. Do you see my point? It's corresponding to the time frame. Now, if this was your 15-minute chart and you're in a expected bullish day, you're in a bullish narrative, and you had an expansion, there's a fair value gap, and you trace down to the range, the discount of the range now, equilibrium to the discount, and you see that you have a previous candle sweep into a fair value gap and this move away, where would you expect the next candles to reprice to? Reprice to. This is how I want you to think. This is the kind of vocabulary I want you guys to use. Where is the market going to reprice to? From here, probably around to here, and buy side liquidity. So then you'll find entry modes to get in line to reprice there, and you're done. That's it. Everything else is your heartbeat getting in the way, the million emotions that you get through before you press the buy or sell that gets in the way. This is as simple as it gets. Where is price? Where did price come from? Where is price going? Price came from a discount PD array. Where is price likely to go? Premium to buy side. You're trying to catch that ride from here to premium to buy side, right? Now, if we go to a 3-month, notice how it's very similar. Now, this is a liquidity void. This candle's high to this candle's, low, but the body is very close to the low because look at that move away. There was no long wick that comes in here to make it a fair value gap. It's a liquidity void. Just opens and shoots away. Discount range comes into the liquidity void, moves away. Where do you think the next 3-month candle's going to go? Let's go to the bonds. Where do you think the next 3-month candle's going to go? Sweep of the previous candle's low. Pretty strong close. That candle's high is in sights. And that's, 4.5%. Now, what's the interest rate? What's the interest rate currently at right now? 4-ish%. Where do you think it can go? Where's the bonds telling you it can go? So what does it tell you that's kind of going to happen in terms of current affairs? Now, I'm not one to, I'm not fear mongering. I'm not doing that. But I'm saying you have to kind of look at what the technicals are pointing towards, right? Inflation is getting worse, right? It's getting worse, much worse than previous years by far. There's tensions, there's political tensions, right? Russia, China, America, whatever. The charts are looking at, higher interest rates for the dollar. It kind of shows what could happen to the US economy, right? It's either they're going to turn into some sort of economical recession, which they've already started to use the word recession now to describe the economy, which is kind of good. These guys were in a recession from here, by the way. From here, they were in a recession. At the top of the high, now they're accepting that they're in a recession, right? These are things to consider. Now, if we just go to the weekly chart, Where do you think the weekly bond chart is trying to reprice it? Remember, look, fair value gap swept the low and we're repricing. This is an accumulation, right? You see how 1, 2, 3, 4 candles are back to back? You can see that as an accumulation. If you go to the daily chart, you see those candles. It's shown by this. Go on a 4-hour time frame, that's even more. That's more consolidated, right? Let's go to the weekly. Go for the dollar. So from the last week, we expected higher prices on the dollar, right? And we got that on the weekly. Now I'm still expecting to be bullish on the dollar. Let's go to Forex Factory. Monday, there's a few orange folders. These orange folders, you still consider them. They're not going to be, you know, pack the punch of a red folder, but these is still your time aspect for, the day. Where do you think the move of the day is likely to reside? The higher probability session, probably your New York session. Tuesday, consumer confidence. Wednesday, PMI. Thursday, we also have the ISM services. No, that's Friday, sorry. Friday we have the ISM services. Thursday we don't have any USD news except the unemployment claims, but you still consider that. The NFP is on this Friday, right? It's on this Friday. Now, we're going to use that to build our weekly profile, which the weekly reports that I do in the Word document format is going to cover now. Use the economic calendar to build your profile. The days of the week with the red folder is where you can expect your manipulation and your distribution. It's not going to consolidate on those days. Those days are going to be your manipulation and your distribution. Frame your power of 3 of the week between those, right? Now, if we go to the monthly chart, I'm still bullish on the monthly until I get here. Therefore, on the weekly time frame, I'm going to be weekly until we get, into that monthly fair value gap. Now, something to consider is the weekly Judas into this candle's wick, right? You see how if we open, it could just completely rebalance this, you know, pending fair value gap in this candle and then just shoot off higher. For euro, is this. And for pound, work your way towards this this fair value gap. Order block fair value gap in the discount. The weekly time frame is going to draw towards that. This is your draw on price for GBP USD. Euro, you expect lower. Of course, using that idea from pound, you can take that idea for euro to also draw lower, right? You can, perhaps get to the consequent encroachment, 50% of this fair value gap. On the daily time frame, we also have this volume imbalance. The next draw on price is this buy side liquidity pool here, and then focus on trading into this relative equal highs here and that volume imbalance, right? 105.73-ish. Mark that out. Mark this volume imbalance out like this and keep this on your chart, right? Work towards this. This is what you want to work towards in price. Now, a lot of you trade the S&P now. Simple. For the monthly, what do you have? A previous sweep on 1, 2, 3 candles monthly highs, right? Well, 1 and 2 because this one swept that one. Where do you think the next monthly candle is likely to trade for the S&P? I'd favor the high stay intact and us to expand lower. Now, if we go to the weekly time frame, where do you think the weekly chart is drawing for? Right? Mark this out and this, right? You see when you see wicks like this, there you can place like a trend line tool across them. Go to the daily. It's going to be like a wedge, like a trend line, right? Like this, right? You see this. Retail will see that as some sort of dynamic support level, and those get traded through. Now we had a institutional order flow entry drill. This candle's high, this candle's low, moved into it, displaced away. You can expect expansion. This is your draw on price, right? You can expect price to go and seek the sell side liquidity beneath this low. When you go into institutional order flow entry drill, this fair value gap, you're expecting the move away, this expansion away now, the next candles to start drawing towards a level of sell side liquidity. Imbalance, institutional order flow entry drill, move away, liquidity. And that is a model in itself because it's very, very repetitive. Whenever you get institutional order flow entry drill and you move away, you target sell side liquidity. Now this builds your bias, in this case, daily chart, daily candles to draw towards there, be a going to look for, shorts on the S&P, and that's the whole intraday model. If you get a market structure shift and you see that institutional order flow entry drill, and that's on like a 1 hour time frame, you can use the next 1 hour opening, find a Judas swing on a very low time frame, 5 to 3 minute, and you can work inside of that. Now, a lot of you guys are leaning towards that, and chapter 6 lesson 1, open high low close, open low high close, will aid you with that a lot. For Bitcoin, stay off your hands for now. You want to see displacement through this low. If we see displacement through this low, this consolidation is the target, right? There is a lot of liquidity build up in this area, right? You see how we run the highs? Let's see if we go and run the lows. Now, with the DXY expecting to run higher and the bonds expecting to run higher, I'd favor this low to get run for Bitcoin. Do I have Ethereum here? I do. The same is for Ethereum. You see how we're running the high? And let's see how we displace through the low. You need the displacement. The displacement shows the disrespect. It's kind of like, I'm not considering you. And it's going to reprice lower. The best way to understand when you're going to deliver buy side to sell or sell side liquidity, or when you're in a buy program, sell program, you want one of two things. You want a market structure shift in that direction, and you want the disrespect of a fair value gap. I'll give you an example. Remember we had that fair value gap here. And look how we displaced through that. We didn't consider that fair value gap, and we reclaimed it, right? From this fair value gap here, you see how the bodies of the candle is stayed within that reclaimed fair value gap, and we move away. It shows the algorithm is, in a buy program. Now, what conducts a buy program? What's the characteristics of a buy program? Two things. It's seeking a buy side liquidity, external range buy side liquidity, and it's respecting a bullish PD arrays. Down candles become support. I'll show you what I mean by down candles become support. You see these candles, these down candles. You see how this candle's you're not really trading through the body of it, right? The body's closes are staying inside of it. That's what you mean by down candles become support. Like these down candles, they should act as support, right? That's order block theory, how ICT intends it. It's not just every down close candle like this. You need a program to be offset. Now, what offsets the program? You need a run on stops, right? You need a run on liquidity, but it has to be in line with context of time. Now, the context that we use is dependent on the time frame. February is after January, right? Now, February is where it starts to kickstart again. There's January, December has a very large withdrawal of liquidity in the market. So we don't take these market structure shifts on a low time frame or your daily time frame, sorry, to be reliable. Just like if you see a market structure shift inside of a lunch period or an Asian range, it's not the most reliable. That's just like your daily time frame outside of specific quarters. Now, when you get time meeting price, this is when it offsets. It's when the two kind of clash. Now, I'll give an example. Let's say it's a 15-minute intraday. Let's say it's 15 minutes time frame inside of a daily discount, and you get a market structure shift from the daily discount inside of a bullish expected day. That's where you find your bullish buy programs to get offset. It's not just the idea that you have a market structure shift. The time of it matters. It has to be inside of a high probability window. For example, a kill zone. That's the time of day you consider. Because a lot of you guys and what you're doing, some of you, and it's kind of the newer guys, you're pattern trading. You're just looking for the pattern. It means nothing. Why is this a market structure shift? If you watch a few weekly commentaries ago, why did I give so much emphasis to this? Where was this made on the monthly fair value gap? If this was made without any context of a PD array, it's nothing. It has to be made at a higher time frame PD array. This is where you can expect the buy and sell programs to offset. Those are your high probability areas. That's why we hunt trade ideas from them. This is something I have to just reiterate into you guys. Back to basics type thing, right? Now, just to kind of tie everything together, DXY, I'm expecting higher prices. You can expect the Judas swing to come back. This is the weekly. If we go to the weekly chart again, this is that weekly candle's high. So we can expect, a move back to the 50% of this candle, a Judas swing, and then we can, go for this buy side liquidity pull above here. This is a daily volume imbalance. Euro to go lower. Any Judas swing into this candle's 50%. This candle's 50%. Also, this candle's low. For pound, expect the run to this discount array being the fair value gap coupled with the order block. And S&P lower, and the reason why, because bullish DXY, it results to a lower foreign currency being euro, pound, and it's also showing a risk off environment. Risk off environment meaning lower S&P, and we should also see a lower crypto market, right? This I'd leave alone. I don't trade crypto personally. If you want to entertain short positions, wait for a clear displacement through, like, get through this fair value gap. Get through this fair value gap, and once you have this for you, the crypto guys that are, entertained by crypto, have this marked out. Work inside of this fair value gap. You also have this fair value gap from this candle's high to this candle's low. You can consider that as well. I don't want to make the chart too messy. You can consider this as well, right? What if you move out of this and you displace away? Keep this fair value gap. It gets reclaimed as a bearish fair value gap, and you can find the retracement into here and a continuation to go short, and you have a lot of imbalance here and the low of this accumulation. Every single accumulation you see is a liquidity pool, right? This whole accumulation, if you can box it off, it's a liquidity pool. The reason behind the consolidation is it accumulates orders. There's orders on both sides of the range. Yes, buy stops are taken out of this consolidation. The sell stops remain, right? That's why the market maker model, we use the initial consolidation as a target, because it's a big pool of liquidity. Consolidations, pool of liquidity. Have that in your notes. So that's gonna wrap it. Actually, one second. Nearly forgot. So going to the COT data, you can see, net shorts are being placed into euro, and it's in perfect timing because DXY is expected to move higher. Euro lower. Sell side liquidity pool here for euro. Sell side liquidity pool here for pound on the daily. And we also had this. Now this was from the previous weekly commentary. We had the fair value gap, move into it. Now when you move into it and away from here, and a lot of you clocked onto this, last week, you expect the next candle to trade lower. This one. And you expect this candle to also trade lower. When you move into fair value gap or imbalance, right? You see here, you see how this is from this high to this low, premium, move into that fair value gap, and you get this candle that moves away from it. Your eye immediately goes to the sell side liquidity pool, and that's your draw on price. Now, this could be a 5-minute chart, and you could have entered there. Your take profit here, or your take profit can be here, but consider a partial around this level, or even a full close if you trade past it and you kind of wick, because it can come and retrace and throw you off the trade. These are things to remember. Move into discount or premium fair value gaps. When you move away from it, your eye goes to the liquidity pool. If you can build a model around that, you will probably have a lot of success, because this is the thing, right? And I want to leave you guys on this message. It's not a new technical that you guys need from me. It's what you have already, and you have to just run with it and develop alongside with it. A technical is not, learning a new technical isn't what gets you to profitability. It's understanding that, the winning trading mindset, and it's consistency in your model and execution. That's what builds consistency. It's not the technical. It's more so how you're applying it and your approach to the market. Every single week for 53 weeks now, well, 54 weeks, I've called the weekly time frame to you guys, and it's a testimony to you guys. These things are so repetitive. How many times have we seen move into fair value gap to liquidity pool? So why don't you guys try and make a model? The guys that are kind of, what do I do? Why don't you consider moves into fair value gap discount retracement into that? Because the thing is, a lot of you guys want this move. I want to get in on this one. Let this move happen, let that retracement happen, and let that move happen here. That second leg, this one, this fair value gap retracement, that's all you need to get a 2-3R trade off that, right? Now, that's going to be it for this weekly commentary. Any questions, of course, ask me on Snapchat. The reason we don't go through intraday stuff now is because the weekly report covers that, and it's way more in depth, and it's written format. So it's way better if we keep these just to what the next week is likely, and further on in the week, the next monthly 3-month candle is likely to hold, and we keep what happened throughout the week in the weekly report. If we just do one thing, last thing together, because it's quite important. Old school weekly commentary, doing the vertical lines for the days. When you see this, right, and you have to couple it with the daily time frame, your Sunday opening price. When you see this, right, you see by Thursday, sometimes the Judas swing is kind of short-lived. You see how it's just staying around Sunday opening price. Monday, Tuesday were pretty tough. You see by Wednesday, you got that expansion. And on the daily, you can tell that it's going for this sell side liquidity pool. Buy side liquidity pool, sorry. Right? If you stay with me, Sunday price, right? And this is your midnight opening price equivalent for the weekly profile. By Wednesday, you see this expansion, right? And now you're overall bullish. By Wednesday, when you see this candle, because you have a 3 bar, right? 1, 2, this is the low, 3 bar, and you have that expansion. This buy side liquidity pool automatically in targets, and then this rejection block to work to. That's how you use the Sunday opening price to understand, right? Even if the Judas swing is not offered, you still have to understand using this, right? Sunday opening price, the 1 hour, how it looks like this, with the understanding of the daily direction, is very easy to formulate if the low of the week is placed in and where the weekly candles like to expand to. These are the things I want you guys to practice. Your Sunday opening price and your midnight opening price. Give these prices big attention. If I was to rely on price points just on my trading, midnight opening price and Sunday opening price is not even debatable. Those two things, in line with just understanding the daily anatomy and expansion of the candle and the weekly candle, you can find just retracement trades in line with the expansion of the daily and the weekly candle, given where you are in terms of the opening price, right? So until next time, and I'll see you guys in the next weekly commentary. Take care.